Stocks climb as the US lifts 25% penal tariff ahead of the reduction to 18% on a swathe of Indian exports. PSU banks, realty and industrials are the big gainers, while FMCG and oil and gas trade soft.
State Bank of India delivers a strong Q3 growth and ups the FY26 guidance, lifting the expectations of overall credit growth. The recalibration of deposit insurance premium by DICGC is another booster for banks.
Deepam receives 2 bids for IDBI, likely from Fairfax and Emirates NBD, even as Kotak Bank bows out. Meanwhile, boards of PFC and REC give their nods to a proposed merger.
Commerce Minister Piyush Goyal tells CNBC-TV18 that the order reducing US tariff to 18% for a big section of Indian goods is expected this week. He adds that he will take up the Section 232 tariffs in negotiations.
Hello, good afternoon. You've tuned into Halftime Report, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, with me and my colleague Sonal as well as Ekta. Good afternoon, girls. And today is a day we're seeing good green on the screen. There's no complaining. Advanced decline ratio is doing well, 24,800. Like you can see above that mark is what the Nifty is managing to hold on to. Nifty Bank holding on to gains of around 8/10 to 9/10%. We have IT that's seeing some bit of a gain today as well. 0.2% of gain for the Nifty IT. Broader end of the market, mid and small cap also is seeing a bit of an outperformance today.
Hey girls, good afternoon. Feels like last week never ended, right? It continued for all of us. But today, of course, markets are taking cues from some clarity that could come by in US-India trade deal. And we've been having a lot of conversations with the government, with participants. And the indication is that, yes, maybe we will get individual item list very, very soon. And that is the conversation we had with the Commerce Minister as well. Yes, Nifty is above that 25,800 mark. But we've come up from the highs, almost 100 points from the top, but no one's complaining. The mid cap, small caps doing well. PSU banking index, that's the biggest gainer today. We do have a lot of other moving parts, something like realty, metals, pharma, financials. We'll discuss a lot of it on the show as well, but looking good and a good start to the week.
Yes, absolutely. You know, the optimism from the India-US trade deal is really filtered down into the equity markets at this point in time. And the other thing which has really stood out is that the FIIs have been net buyers in terms of the Indian equities out of the past 10 trading sessions. So 5 out of 10 trading sessions, they have been buying in terms of the Indian equities. So that's 50%. That is definitely a positive considering the kind of relentless selling that we saw at the start of the year. The mid caps outperforming. We have silver ETFs which are higher in today's trading session, giving you a sense in terms of the risk appetite that the market is showing in today's trade. And we do have a lot lined up in the next 60 odd minutes.
We do. So let's get you what do we have on the show today. In our What's Trending segment, today we put the spotlight on PSU bank stocks, which are surging post strong Q3 earnings. Later, we'll also bring you excerpts from our conversation with SBI Chairman C.S. Sethi on the bank's Q3 earnings. We'll also speak with the management of Wockhardt Group to decode impact of India-US trade deal. That's the big talking point. At the end, we speak to the management of BLS International on their Q3 earnings.
All right, well, that's all that we have lined up for you in the next 1 hour. It's a power-packed show, and we're going to start the show with banks, which are in focus in our What's Trending segment on Halftime Report today. State Bank of India is leading the charge after strong Q3 FY26 performance and a hike in the FY26 loan growth guidance, which has really enthused the markets. It's at around 13 to 15% now. IDBI Bank is also buzzing as Deepam has received 2 bids for it, while the recalibration of deposit insurance premiums by the DICGC is also aiding and adding to that positive sentiment for the sector. Let's go across to Gaurav for a quick wrap on the PSU Bank earnings, valuations and the insurance premium impact, and we'll follow it up with some key takeaways from the State Bank of India management. Gaurav, Over to you first.
Well, yes, if you look at PSU Banks Index, it is one of the biggest gainers in a day today, and we have seen a gains as high as 3% in the index itself. And these gains are obviously led by SBI, who reported strong set of numbers, but we saw Indian Bank and Bank of India also supporting these gains. First, let's talk about SBI. If you look at the results, those were actually spectacular results for a bank which is the biggest bank of India. 15.5% of a growth in terms of loan book, and they have also upped their guidance from 12 to 14% to 13 to 15%. Other than that, if you look at asset quality as well, it has been a very strong quarter for asset quality, because we have seen net NPAs now reaching 20 years low level at 0.39% only. And lastly, if you look at profit, that also grew almost by 25% on a year-on-year basis. So definitely a very strong set of numbers in terms of SBI's result in third quarter. But there are other factors as well. Throughout this quarter, we have seen most of the banks who have already reported the numbers, and we saw some hits and misses. First, let's talk about Bank of India, Indian Bank, Union Bank. If you look at these banks, we saw Bank of India actually reporting very good set of numbers in terms of net interest margins. Indian Bank and Union Bank actually reporting a very strong set of number in terms of ROA expansion. Both of these banks actually reported very good number there. On the flip side, we also saw PNB actually missing their net interest margin target and guidance. And at the same time, we saw Canara Bank actually also reporting net interest margins which were actually lower than the street's expectation and their own commentary itself. So all in all, we saw this effect as well. But what is happening is that there is another booster which is coming up, not just for PSU banks, but for the entire banking pack. Now, this is the DICGC premium. Remember, we usually retailers get premium insurance up to 5 lakhs for their deposit, and for that bank pays a small amount of premium to DICGC, which is 12 paisa for 100 rupees of deposits. Now what RBI has done is that they have actually reduced this premium. They are going to categorize the banks as A, B, C and D, and for each of the categories the premium will be different. For category A, the premium will be as low as 8 paisa for 100 rupees of deposits, which is actually positive for banks, because analysts believe that this can actually boost the ROAs almost by 1 to 2%, and it can also give a boost to the ROAs almost by 40 basis points. Remember, the analysts believe that this is going to be a bigger booster for PSU banks, and that is the reason we are seeing a big push in the PSU bank sector, not just today, but for the last few days in trade.
Okay, all right, take that point. Thank you so much for summarizing those moves for us, Gaurav. That's the report card from the PSU space. But SBI, that of course is the big mover on the back of good set of Q3 numbers. NPAs came in lowest in last 2 decades. Management also upped the guidance from 12 to 14% to 13 to 15% for FY26. Our colleague Ritu Singh caught up with the chairman and began by asking about the quarter gone by and how they see growth going ahead. Listen into that conversation.
The credit growth has come across the sectors. Every business segment has contributed. In fact, the corporate also had rebounded almost 13% corporate credit growth, and across RAM segment, every segment of RAM has contributed double-digit growth. In terms of the guidance, yes, we are upping the guidance from 12 to 14 to 13 to 15% for the current financial year on an aggregate basis. I don't want to go beyond the current quarter. I think we need to look at, there are so many positives in terms of the trade deals, in terms of the budget announcements, in terms of the monetary policy related announcements. I think everywhere I see a greater opportunity for State Bank of India. We are present both domestically very strong and also cross-border. Opportunities internal to us in India as well as cross-border opportunities are significant for us. So I believe that bank is well positioned to sustain this growth momentum. So the guidance is for the current quarter, that 13 to 15%, as against 12 to 14% what we have previously given. I think we will come back probably in the next quarter in terms of the full year guidance for FY27.
Sure, sir. But on such a large base that you already have, 13 to 15% kind of a growth, would the RAM segment alone drive that? Or do you think corporate would also have to pick up in a meaningful way, especially now going ahead? Of course, it hasn't started yet. M&A financing, REIT financing, all that also coming in. Do you see a higher, corporate credit growth as well, driving growth for SBI going ahead?
Corporate credit growth, we expect that double-digit growth rate will continue. In fact, my guidance for the Q3 was that we will do lower double-digit, and I think we have substantially exceeded that guidance. We've almost reached 13.5% as against our expectation about 10 to 11%. So I believe that the corporate credit growth will be double-digit, will be continued in the current quarter also. And the trade deals will definitely help in terms of, primarily the US deal has removed the overhang on the tariff side, which is extremely positive in terms of increasing the sentiment for the investment climate. So I believe that the double-digit growth rate on the corporate will continue, while RAM will still be doing the heavy lifting in terms of the credit growth.
Just a quick word on, this headwind of trade deal, that overhang being kind of gone, at least waning with the US deal, some of the contours becoming clearer, the EU FTA kicking in hopefully next year. Your MSME book is already at 26 trillion rupees. Firstly, in the last 8 to 9 months, when there was this overhang of tariffs, was there any stress build up that you saw in the portfolio? And going ahead, do you think you could grow the MSME book in a more meaningful way with this overhang out of the way? Perhaps high teens, in the 20s? What is the expectation?
So if you see our pure MSME growth, overall MSME, what we call MSME is around 21%. There could be some segments or exposures which are not classified as corporate coming into MSME. But if you take pure MSME, our growth rate is about 18%. So my view is that the trade deal and the positivity which the trade deals have created are equally beneficial, if not more. As much as corporates will get benefited, MSME, downstream industries also will get benefited. In fact, in the US trade deal, much of the benefit actually is available to the MSMEs, whether it is textiles, apparels, or shrimp cultivators. They're all small enterprises, and they got really benefited. And apart from the positive environment which is coming out of the trade deals, the information and the data availability on the MSME is very robust now.
So finally, 2 quick stats. If you could give us, credit costs for 9 months has come down to 0.39%. We've seen an improvement in the slippages Q on Q as well. What kind of an improvement could you end the year with? With the SMA book also seeing a bit of an uptick. And secondly, on margins, safe to say they've bottomed out and we see it trending up from here on?
I still would like to stick to my guidance earlier given, Ritu. I think we are sticking to the NIM of about 3%. For the current, the full year NIM would be around about 3%. And on the credit costs, I think our earlier guidance was 50 basis point. We are still sticking to it. There are not going to be any surprises on the asset quality side.
Okay, that is the SBI chairman for y'all on their numbers as well. But on that note, we're going to slip into a very short break. We'll come back and we'll connect with the management of Wockhardt Group to decode the impact of the India-US trade deal. Stay tuned in.
Welcome back. You're still tuned into Halftime Report on CNBC TV18. Well, shifting focus to the pharma space, I did have the opportunity to catch up with Wockhardt's chairman, Dr. Habil Kurakiwala, on the sidelines of a book launch by Lupin, and began by asking him about the US-India trade deal and what it could mean for the pharmaceutical sector. Listen in to this exclusive.
As for the current trade agreement, there is no tariff duty. Even earlier, when we had 50%, there was no tariff on this. Mainly because the Indian generics have 40% of American prescription. And it is not possible easily to switch manufacturing to the US. And the very fact that we Indian companies captured so much market share is we were competitive. And if they start manufacturing in America, it will cost 3 to 4 times than what they are buying from us today.
Absolutely. The other point that I just wanted to bring up was basically what was announced in the budget, the Bioshakti investment of 10,000 crores for a push towards biologics in India. Do you see that actually allowing Indian biologics to now come to the fore?
I think the future new drugs and drug discovery significantly will come in a biological space. And therefore, any initiative we take, we are not as strong in biologicals today, excepting few companies, than what we are there in a generic pharmaceutical. Unfortunately for us, China is far ahead in the new biological space. So I think what government effort is to catch up and invest a large infrastructure creation in the country. I'm sure if it will help only if government finds a new model of execution of this facility. If we continue existing model, it will be kind of an investment which will not give you an edge in terms of competitiveness.
WCK 5222, that's the big one. Do you think that you will probably be a company that will go solo and launch it individually without a partnership in the US?
Let me put it to you this way. And this is the argument with all my friends and in the organization goes on. And everybody believes that it is a relatively a high risk if we do it on our own. And my general response to all of them is simple. Okay, if I can create an organization to find a new drug, which is far more difficult than to do a business of that drug. So we have decided now that in USA, we will do it ourselves.
So you're not looking for a partner?
We were considering partnering, but the valuation, what we believe should be getting, we are nowhere near not getting it. And what we are seeing, is big pharma are literally exiting. Not only research many years back, today exiting business. Because if you don't have a new product, how do you continue to be in business? So in terms of talent, we need to create an organization is easily available in USA and worldwide.
So let me get this clear. You're not looking to out-license WCK 5222 for the US markets or any other market at this point?
For US market, we are considering that option, but we are simultaneously building our own organization. As far as other markets are concerned, we will go, generally we would like to out-license in many markets because to managing so many businesses may be a challenge. And we want to remain focused on very few markets like US, India, and maybe a few other where we can do it ourselves.
What is the valuation difference? What is the difference between what you're asking and what the companies are proposing?
I cannot discuss that.
How much? Is it a 10, 20, 30% difference?
No. I cannot discuss that.
Okay. And when do we see the approval come through in the US?
We expect this to approve by the middle of the calendar year.
Market size?
US alone, we believe it would be somewhere near $1 billion plus.
$1 billion plus. Okay. And worldwide, what do you think the market size would be?
See, the question is, it is a 10-year period. The drug resistance is increasing. So not only for Xenic, but elsewhere, we feel it's a transformative stage as far as Wockhardt is concerned, and even India is concerned. Because we are the most successful drug discovery research organization in antibiotic in the world today. We've got 6 drugs. No one has got 1 or 2 drugs, and they are all boutique research organizations. So our mindset is fundamentally to create a global organization for a whole range of our products.
So how many in the pipeline? How many in the pipeline?
We have 6 products fast track. So these over the next 3, 4, 5 years, they would be all in the global market.
All right, that's an important conversation on the impact of US-India trade deal on the pharma space. For now, we'll slip into a short break. When we come back, we'll get in Vivek to take us through all the stocks that are moving around in trade. Stay tuned for that. Welcome back. You're still tuned into Halftime Report. Continues to be a good day for the broader markets as well. So we have Vivek to take us through the stocks that are moving around in trade. Vivek, over to you.
Well, thank you so much for that. A session where we started off on a very positive note, advances outpacing declines, and we hope that particular trend continues. In terms of individual names, what we've done is we've bunched up most of the exporters today together on the back of the fact that there have been more details that have come about as far as the India-US trade deal is concerned. Most of the exporters, have a look at Vibe Global, up almost 15%, Avanti Feeds, Wellspun Living, most of these names up anywhere between 2 to 8 to 10% too. The other name on the radar is SBI. Very sharp outperformance, a clear beat as far as Q3 results are concerned, and the company has also gone ahead and raised a credit growth guidance in this particular quarter. Policy Bazaar, it was a very volatile trading week for the company. Will they, won't they in terms of a QIP? Company has given a clarification to the exchange saying that the QIP is off the table. Stock higher by almost 3.5%. Kalyan Jewellers, very strong beat as far as Q3 results are concerned. Along with that, they've also gone ahead and approached SEBI in order to go ahead and check if there is any irregularity as far as the trading pattern is concerned. Stock higher by almost 13% today. Most of the consumer durables name, after a while, seeing a very sharp bounce back. Cropton Consumer, good beat as far as Q3 is concerned. Voltas, Blue Star, Whirlpool, ahead of the upcoming or impending summer season, seeing a bit of buying. And most of the pharma names, some positive commentary coming, although there is no material development so far. Most of the pharma names seeing a bit of a relief rally. Loris amongst the highest gainers today. On the other hand, quite a few laggards as well. REC, PFC, the merger is now being concretized, but both of these names have cooled off. Post the day's high, REC in fact is down almost 2.5%. Have a look at Patanjali, multiple large trades over here, one of the top NSE 500 laggards. And lastly, Siemens, was down almost 5% on Friday post a muted set of numbers. Not too much positive commentary coming in from the management. That stock down by another 2% in the session today.
Okay, all right, Vivek. Thanks very much for that. So those are all the buzzing stocks in today's trading session. Just watch out for a couple of banks such as ICICI Bank, which is taking it a little bit on the chin. So down around 1% currently for ICICI. And we have ITC, which is down around 0.8% at this point in time. Remember, it's been a rough start in terms of the year for ITC already. We'll take a short break, but on the other side, Manisha Gupta will join in. She's talking to the CEO of the International Gemological Institute. Stay tuned.
Welcome back. Joining us on the show now is Thomas Printer. He's MD and CEO at IGI. Mr. Printer, hi. Thank you so much for joining in. Congratulations on acquisition of AGL. What does it mean for the company and what does it bring on the table for you?
First of all, thank you, Manisha, for having me on board on your show. The acquisition of AGL means a lot to IGI from the perspective of colored gemstones. IGI has extreme proficiency in diamond grading, the 4 Cs and the origin and the treatments, etc. In color stones, AGL in the US is rated at the top in the US for the high-end luxury gemstones. And that is the reason why we have acquired AGL for their expertise in certifying in gemstones. And gemstones is very intricate. I mean, there is a lot of aspects in the gemstones. It depends on the origin, the treatments, the rarity, the geographical characteristics. So all these combined makes it a very complex kind of grading. And IGI has acquired AGL for that particular reason.
Mr. Printer, would you say that you've covered all your bases now? Naturals, lab-growns, diamonds and gemstones now?
Well, still we have a lot way to go.
All right. Are you suggesting there's something in the pipeline?
No, but we are always doing due diligence to see how we expand our map on the gems and jewelry sector of the world.
Mr. Printer, there's a lot of euphoria in the Indian markets with the India-EU deal and the India-US trade agreement as well. I've been talking to a lot of gem and jewelry participants, the GJPC as well, and they all tell me that the trade is only going to grow from here on.
Correct. I agree with the whole trade, See, India is on the way up. Where gemstones is concerned, the market is fast expanding. We already have leadership in the new kid on the block, which is the lab-grown diamonds. And we have the largest market share of the lab-grown diamonds globally. Plus, we are doing great guns in the natural diamond front. And now we have the gemstone category with us, with AGL on our assets. AGL is known for its assessment of gemstones, and IGI has the scalability. So put together is a win-win situation where we will take AGL globally.
The last report that I read, Mr. Printer, it suggested that IGI operates 35 labs out of 10 countries. Is there a change in that number?
Not as yet, but it will change. I mean, with AGL, we have another lab anyway. So we will scale up AGL through all our different geographical locations and scale up the whole situation. I mean, that is to our advantage.
Mr. Printer, when you look at India as a market, and of course it's the fastest growing, we do understand that the natural diamond penetration is 10 to 11%. Gemstones is even smaller. It's perhaps a bigger market in US and Europe, etc. How are you looking to add this to your benefit?
See, the thing is, you have to understand 90% or mostly most of the gemstones are cut and polished in Jaipur. And Jaipur is the global cutting center of the world. And we have a base in Jaipur, which is very strong. We are based in India. And just like as diamonds are cut and polished in Surat, where we have the largest base there, we also have Jaipur. So now diamonds and color stones, the cutting and polishing happens in India. So that is the reason why we have acquired AGL, which is the topmost color stone laboratory in the US. And US is the largest color stone market of the world.
You talked about the lab-grown diamonds, and well, yes, that is the feedback coming in from the market as well, that the wholesale retail prices seems to have stabilized now, and the kind of penetration that we've seen from this category continues to only grow. Any sense that you can give on that?
See, the thing is, in lab-grown diamonds, the capacity expansion is constantly being done, and we are upgrading our facilities and infrastructure to match the capacity upgrade. So what happens is, we are constantly upgrading our facilities. At the same time, the growers and the polishers are upgrading their reactors capacity. So overall, the lab-grown volumes are growing very, very fast. And we want to be the guys to regulate the diamond sector. We grade diamonds. We are a third-party certifying body. Independent third-party certifying body. For us, a diamond, we give you the origin first and the 4Cs later. Same way now with AGL in our portfolio, we will give you the exact clarification which is needed for a gemstone. And that is why we have both these factors in our case.
All right.
Okay, and as someone who's born in Jaipur, it was so good to know the stats around it being the global hub.
Yeah, the gemstones come from Jaipur. Oh, absolutely. That's the.
Being born in Jaipur, I love Jaipur.
I would convey to people who are now staying in Jaipur, because I'm no more staying there, but it was good to know that. Okay, all right, Manisha, thank you so much for taking us through that conversation. Mr. Printer, thank you so much for joining in today. With that, we'll slip into another break and come back with one more interesting conversation. Winnie will be in conversation with BLS International.
Welcome back to Halftime Report on CNBC-TV18. As of now, the Nifty is at 25,800, about that mark, 0.5% of gain for the Nifty 50 so far. But BLS International, they reported their numbers as well, Q3 numbers. Volumes in visa and consultancy services saw growth. Digital business saw growth as well, but margins were hit in the digital business front. Now, I spoke to the management on the road ahead for the company. Let's listen in.
If you see our revenue growth as well, our revenue, we have achieved 736 crores, which is a growth of around 43% compared to similar quarter last year. Our net profit has also now reached 170 crore in this quarter, which is a growth of 33%. And from volume, we have seen a good growth coming in. Around 18% of our visa volume has grown from similar quarter last year. So as we have been saying, that for the next 4 to 5 years, we want to maintain 20 to 25% growth of the company company. Net revenue per application has also gone up, on an organic basis. If there is a M&A or there's a big major contract that gets added to the kitty, we could grow further.
And so you said net revenue has also gone up. What is the net revenue per application increasing? Is there some price hike or what is the reason for that?
No, actually, there are multiple factors. As a company, we have worked over the last few years, on multiple aspects. Wherein newer contracts, the service fee is higher. We are getting more conversion of different value-added services, and cost also has streamlined as economies of scale come in. As we win newer contracts, we can utilize the existing offices. So there are multiple factors, that has led to an increase in revenue per application.
Okay, couple of questions on the digital service side as well. Now, revenue surely has seen a very good growth, but when I'm looking at it in terms of margins, seems like there's some dilution over there, and because of that, overall margins have also come down. So, one, digital services growth as well as margins on that business, and overall margin outlook as well for the company.
See, if you see our margins in Visa business have actually gone up. EBITDA margins are upwards of 40% now, which has been constantly growing. We were at 16, 20, 24, over the last few years, and now we have grown to this level. And our target is to maintain that. Regarding digital business, we have always said that, the new company, Artifilis, that we acquired, is at a very less margin profile. It is a lead generation business. And over time, our target is, as we introduce more value-added services to the existing customers, margins might go up as well in that business. That is why you see consolidated margins, which is around 26%, whereas we always do segment reporting, and our Visa margins have actually gone up to around 40%.
No, that's sure. Visa margins have gone up, but digital margins, which have come down to 6.2%, where do you see that headed then in the next year, FY27?
No, our immediate target, if you see, this is the first quarter wherein, if you compare to last quarter, similar, last year, same quarter, the full numbers of Artifilis were not consolidated. Now, this time they are fully consolidated in this quarter. That is why there's a slight decrease in margin. As of now, our target is to maintain and grow from these margin levels. As in the Visa business also in the past, our margins have increased. Here also, we feel, as in when new allied services get introduced to the existing customers, there will be an increase in margin in this business as well.
All right, that's the word coming in from BLS International. With that, we'll slip into another break. When we come back, we'll get you more on the market moves, get you some stock-specific action as well. Stay tuned for that.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, it's turning out to be a day where we are seeing some amount of traction coming in for the markets on an overall basis. And what stands out is the gains that we're seeing for the broader markets at this point in time. So it's holding steady with the mid-cap index up around 1.2%. And in fact, the advanced decline ratio should come up for you, around 3,100 stocks advancing to around 1,200 stocks declining. And that has been the case through the trading session. So that's very heartening to know that there is this sustainable advanced decline ratio which is coming through today. In terms of specific stocks, just want to point out that, a couple of stocks such as ACC is in focus. That stock is actually at a fresh 52-week low in today's trading session. We have Ashok Leyland, however, which is seeing the best levels that it's seen in a year. So that stock is, trending at this point in time. And we do have stocks such as Cummins India, which is also at a fresh 52-week high in today's trading session, giving company to Federal Bank. So a lot taking place in terms of specific stocks today. So let's see whether this kind of traction of, continues at least for the broader markets at this point in time. But the markets seem to be looking steady and on a strong footing at this point. We're going to wrap up on Halftime Report. Business Lunch will take all the action forward.